You go to work, you get paid. Now you have money. Awesome. But what happens next? Where do you put your hard-earned cash? And how do you use it to pay your bills? Banking. Banks take your money, keep it secure, and help you use it when you need it. You can think of a bank account as a secure place where you stash your cash. It's like a digital wallet. This way, you don't have to keep your money in your pocket, but you know exactly where it is and how much you have. And the bank lets you access it whenever you need to pay for something. You know what helps us pay for things? Our Patreon supporters. They help us keep the lights on and the cameras rolling. Big thanks to these wonderful people who make our work possible. If you'd like to join them, visit patreon.com/Socratica. We thank you, and our bank account thanks you. There are different types of bank accounts, each with its own purpose. The most common ones are savings accounts and checking accounts. So what's the difference? A savings account is where you park your money to save it for future use. Bonus. It earns interest. That means the bank pays you a teeny tiny little bit extra for keeping your money with them. But there may be a catch. Savings accounts sometimes limit the number of times you can take money out each month. This encourages you to save rather than spend. And your money? It's protected. Most savings accounts are insured by the government. So even if the bank has trouble, your cash is safe. Imagine you're saving up for a new phone or a vacation. A savings account is perfect for setting that money aside until you're ready to spend it. Here's something to look out for though. Banks often have minimum balance requirements for their savings accounts. If your account balance drops below the minimum, you'll get hit with a penalty, which makes your balance even lower. So if you're not paying attention, you're going to lose money on this deal. A checking account is your go-to account for everyday spending. You can deposit your paycheck here, pay your bills, buy groceries, and it's easy to handle those transactions online. With a checking account, you get a debit card that you can use just like cash. You can swipe it at stores or use it online, and the money comes straight out of your account. Another handy feature of your checking account is checks, writing checks, and depositing checks. It might feel old school, but checks are still useful for things like paying rent or larger expenses. This is the traditional way banks did business with their customers. And for that reason, they still make it easy for you. And unlike savings accounts, checking accounts usually don't limit your transactions. Spend as much as you need to. So if you're handling day-to-day expenses, a checking account is the way to go. It's all about easy access to your money whenever you need it. Having a bank account means you're less a person and more a number. It's not personal. When you open a bank account, you get a unique account number. Think of it as your bank account's ID. The routing number, on the other hand, is like the bank's address. It tells other banks where your account is located. You need both these numbers for direct deposits, wire transfers, and setting up automatic payments. You don't have to memorize these numbers. You'll be able to find them when you log into your account online or by looking at one of your checks. Speaking of checks, or checks if you're outside the USC, let's take a closer look at this living piece of banking history. First, focus on the practical. How do you read or write a check? On the check, you'll write the date, the pay's name, the amount in numbers, and the amount in words. Sign it, and if needed, add a note in the memo line. Reading a check is just as straightforward. Each section tells you something useful. How much the check is worth, where the money is coming from, and where it's going. The account number and routing number are printed at the bottom, usually separated by some odd symbols. We don't talk about them. Need more checks? You don't have to order them from your bank. There are many online services where you can order personalized checks, often at a lower cost, and with CATs. Just make sure you have your account and routing numbers handy when placing an order. Do be cautious and choose reputable companies to avoid any potential security risks. The one drawback about checks is that it's all too easy for a crook to pretend they're you. So keep your checkbook safely locked up at home. While you're busy writing checks, make sure you actually have enough money in your account to cover them. In other words, balance your checkbook. Balancing your checkbook means keeping track of all your deposits and withdrawals, so you always know how much money you have. Start by recording every transaction. There are checks you've written, debit card purchases, ATM withdrawals, and any fees. Make sure to note all the deposits too, like paychecks or transfers. Then regularly compare your records with your bank statements to ensure they match. This helps you spot any errors or unauthorized transactions. Remember the golden rule. Don't write a check you can't cash. There's a special kind of punishment your bank doles out if you fail to follow this advice. An overdraft happens when you spend more money than you have in your account. For example, imagine you have $50 in your checking account. You buy groceries for $60. The bank covers the extra $10, but they'll charge you an overdraft fee. This fee can be quite hefty, often around $35, and it can add up if you're not careful. Overdraft protection services can link your checking account to a savings account or a credit card to cover the difference. But these can also come with fees. Always keep an eye on your balance and consider setting up alerts to notify you when your funds are low. Moving past paper checks into the modern era. There are several options for getting money into your bank account and taking it back out again. You can deposit money through direct deposit, where your paycheck goes straight into your account electronically. This is not only convenient, but also often faster than receiving a physical check. Want to transfer money from another account? Use online banking or a mobile app to move funds instantly, or schedule future transfers. To take money out, you can withdraw cash from an ATM, use a debit card for purchases, or make a transfer to another account. If you really want to have that old school banking experience during banking hours, most banks still have physical branches where you can go in and ask a bank teller to do the transaction for you. Each method has its own advantages, as well as sometimes fees involved. So, choose what works best for you in each situation. So you may be wondering, what's in it for the bank? It can't be worth it to do all this work for people and just hope they mess up so they can charge a small fee. You've seen those big, beautiful bank buildings. What pays for all that? How do banks make money? We've discussed how banks charge fees for various services, like account maintenance, overdrafts, and more. These fees do add up and contribute to their income. But banks earn the big bucks from the difference between the interest they pay you on deposits and the interest they charge on loan. And banks invest too. They put money into stocks, bonds, real estate, earning returns from these investments. So a bank's revenue comes from a mix of interest, fees, and investments. It's a balanced approach to making money. If you want to learn more about this part of the story, visit our website socratica.com. We've created an eye-opening mini lesson on how banks make money. Find the link below. Next time you see a commercial for a bank, listen carefully to the message they're sending. They want you to feel safe and secure, like you have a big, strong friend looking out for you and protecting your monies. We've been trained to trust banks to do the right thing, keeping your valuables in a safe. We believe they will make wise investments, so everyone receives a little bit of interest back in return for trusting them with your money. But what if the unthinkable happens? What if the bank fails? That's where deposit insurance comes in. This is a safety net for your money. In the US, there's the FDIC, the Federal Deposit Insurance Corporation. They insure your deposits up to $250,000. That means if the bank goes under, you're covered for up to $250,000. This isn't just a theoretical worry. It's happened in recent history. Take Silicon Valley Bank, for example, which collapsed in 2023. The US federal government bailed out the bank using tax dollars to cover the losses. If the bailout had not occurred, then the FDIC would have been called in to protect depositors. In the UK, there's the Financial Services Compensation Scheme, or FSCS, which covers up to. Similar protections exist in the EU and Canada too. Deposit insurance gives you peace of mind knowing your money is secure, up to a limit. no matter what happens to the bank. Let's recap and make sure we understand where banking fits in to the broader picture of personal finance. As we've seen, banks offer a lot more than just a place to keep your cash. They provide personal and business loans to help you buy a car, a home, or expand your business. Mortgages are a big part of this too. Credit cards let you borrow money for purchases with the promise to pay back later. They often come with perks like rewards or cash back, but it's important to manage them wisely to avoid high interest charges. Then there are debit cards. Unlike credit cards, they pull money directly from your checking account when you make a purchase. Banks also offer investment services. They can help you invest in stocks, bonds, and mutual funds to grow your wealth. You need advice on managing your money. Banks provide financial advisory services too. They can guide you on saving for retirement, budgeting, and more. Online and mobile banking have made managing your money easier than ever. Transfer funds, pay bills, check balances, all from your computer or phone. In short, banks provide tools and services to help you manage, grow, and protect your money. Understanding basic banking is essential. It helps you make the most of the services available and ensures you're making smart financial decisions.